much. In addition to the folks that we have here, we also want to bring in our editor-in-chief, Andy Serwer, as well as AGF U.S. policy strategist Greg Valliere, who's joining us from Washington. Greg, I want to go to you first here. There had been some debate about whether we would get this emergency cut. Here it is. What do you make of this? Because there's also been a lot of debate, to Rick's point earlier, about the effectiveness of monetary policy in the face of coronavirus. Is this a fix that is not going to work in this particular case?
It's not a cure for the virus, obviously, but I'd say this move greatly reduces chances of a recession. I think that's the major reason why the Fed moved.
So it sounds like you think it was the right thing to do, that they couldn't wait until their meeting that's coming up shortly?
I think they had to send a signal as to how seriously they took it. Even before this move, I was saying that this will lead to an unprecedented round of refinancing. Now that's going to be intensified. I think there are some positive factors here, and I think the Fed could move again in late spring, early summer if they had to. Psychologically, very important for the markets.
Andy, let's bring you into the conversation. Just outside, Rick and I were talking about the possibility that if there was a cut like this today, I mean, is there any chance that that actually stokes more panic? Because you see kind of what looks like an emergency reaction, and obviously if an emergency reaction was needed, might that actually cause negative sentiment now in the next few days?
The old backfire. It's certainly possible, and you have to ask yourself about the thought process at the Federal Reserve. Were they in fact responding to the market, not responding to the moves in Europe? What sort of calculations were they using to make this decision? Because just this morning, we were thinking that we were going to get a 25 basis point cut at the regular meeting in March, right? And so now all of a sudden, it does look like the Fed is really concerned. So in these instances, you always ask yourself, what do they know that we don't know? It's not necessarily something that's allaying my fears in particular. Also because, is this really going to make people go out and get more money? 50 basis points with rates so low. And I'm also concerned, as you know, for a long time about rates being so low that we're running out of firepower.
Yeah, I want to bring Simeon in on that point about, will this get people more money and will it get them to go into stores? Because you cover retailers. So are consumers going to say, oh, good, the Fed's cutting. Right. I guess I can go to the mall now.
Right. So it's interesting because I think that the consumer side, listen, if it gets to the point where people are worried about leaving their house, forget about whether they can buy things, that's a different story. The Fed cut is not going to impact that. What Dan and I were talking about, that there's this interesting dynamic here where you talk to the investors I speak to, people are trying to figure out, right, the conversation we're having, reality versus signaling. Yep. What this might do, I think if you were a smaller company without access to credit, I think what you can have in these scenarios is the Nikes of the world will weather this. There's going to be this phenomenal opportunity, but if you don't have the ability to simply say, I will weather through this, having liquidity might be able to get you through. And I think there might be an element there from a corporate level that feeds a health that wasn't there.
There's also a point, that there are other mechanisms that can be taken, which is to say, like delaying taxes. And I know the Chinese are very concerned because of, say, smaller businesses in China are just really getting killed right now. We're not seeing anything near that here. It's more like, say, airlines and travel are getting hit here first. But, who knows where it's going?
The Fed is, famously data dependent, and I might ask Greg Valliere about this. Is the only data the Fed is looking at here the financial markets, and is that enough? What do you think, Greg?
Those from around the country. I think a lot of the regions are reporting that things could freeze up. Also, I'd be really interested at the press conference at 11 o'clock. Will they talk about any other measures? Will they talk about easing up on lending standards, for example? I think that could be in the mix. There's other stuff aside from the Fed that also will be in the mix, including, bridge loans to companies that aren't doing well, outright grants to companies, maybe even a lifting of tariffs temporarily. There are other policies that I think will creep into the narrative over the next few weeks.
A lot of those are things the Fed can't do.
Right.
You're mostly talking about fiscal measures or policy things that President Trump would actually do when you talk about tariffs.
And taxes.
And taxes, right.
Yeah, I want to get back to Brian for just a moment, because this also comes back to the idea of messaging, right? Whether it's messaging from the administration, which I want to ask Greg about in a moment. But first, I want to ask you, Brian, about messaging, because what we've been hearing from the Fed in recent days seemed to signal they weren't going to yet take action, that they were pausing and waiting and sort of being prudent about this. Are we getting any kind of insight here into what changed their minds? I know we're going to have a press conference in about an hour, so presumably we'll get some more insight then.
Yeah, Julie, the messaging really was that the Federal Reserve was ready to act, but as you mentioned, no signal about whether or not they were actually going to act on anything at all. And after we did see the statement from the Federal Reserve from Jay Powell around 2:30 on Friday last week, it did seem like that lent some calm to the markets. As you recall, towards the end of the trading session on that day, we did see a lot of those losses pair, and then we saw the positive day yesterday on Monday after there was the intent for that G7 call. But as we saw earlier this morning, that 7 a.m. call from the G7 finance ministers and central bankers maybe didn't have the gusto or the weight that maybe the markets were expecting. It's tough to say whether or not that was what factored into the Federal Reserve only a few hours later deciding to enact its emergency 50 basis point cut. We did, however, see a number of central banks last night implement cuts. So when you talk about the Central Bank of Australia, for example, also Malaysia implementing cuts. So it's not like the Federal Reserve was the first to move, but it is interesting to note that the Federal Reserve was the first to move among the major central banks that were being watched, including the ECB and the BOJ. It'll be interesting to see if the two of them have any announcements of their own. But again, as you mentioned, all eyes will be on that 11 a.m. press conference with Chairman Powell, which will be starting in just under an hour or so.
Hey, Brian, is it fair to call this preemptive then? Is it preemptive, or are they reacting to what's already existing?
Yeah, this is certainly preemptive. This is in a way comparable to the insurance cuts that were put into place last year, although those insurance cuts for a total of 75 basis points were done on schedule, right, inside of those actually scheduled FOMC meetings, whereas this is outside of that. The last time we did have an emergency cut was in October of 2008, but the precedent was actually slightly different. At the time in 2008, it was an emergency cut that was implemented before market open on a Wednesday, whereas this was actually an emergency cut that was put into place 30 minutes after market open. So again, curious timing here. It is interesting to watch whether or not the outcome from the markets from the G7 coordinated statement was partially to blame for that. But I do think it's worth watching in the future what this 50 basis point cut will do. A lot of people are on the fence about whether or not easing interest rates would do anything to stop the spread of the virus itself, but maybe to at least ease financial conditions for the time being.
For the time being, we'll see how long it lasts, Brian. Greg, let's get back to you because, again, I wanted to come back to this idea of messaging. We talked about Fed messaging. Let's talk about administration messaging, right? Because the message from the administration has largely been one of calm. We have this under control. That's been from the high level. However, what we've been hearing sort of anecdotally from around the country has not been as reassuring, whether it's individuals saying they couldn't get tested when they needed to be to various medical systems. So what do you think the administration needs to do, if there's anything they can do on that front?
Well, I thought they got off to a rocky start, but I think in the last 2 or 3 days, things have looked a little more stable. I thought Pence did a pretty good job yesterday at the briefing. Azar, the HHS secretary, looked good. The more they can use Dr. Anthony Fauci, the better. He's really great. So there are some things that they can do to project calm, but you can't sugarcoat this. This is going to get worse. There are going to be far more fatalities, and I think the White House has to say this. They have to level with people. To me, the big issue for Trump's reelection is that an incumbent has a really hard time getting reelected in a recession, regardless of why there was a recession. And again, I think today's move by the Fed diminishes the chances of a recession.
And Greg, I'm not sure we got your take on what we were discussing a few moments ago about the idea of how consumers would react to this emergency cut. I mean, it might help stocks in the short term, but what does it really do for the average person, maybe American citizen right now, who is concerned, watching headlines about the virus? You see a sort of emergency Fed cut. I don't know that really helps people make any smarter decisions about what to do amid the virus spreading.
Well, the negative is that the saver class, mostly senior citizens, have been hit again. I mean, they want yield, and yields keep falling instead of going up. But I think at the same time, there will be a tremendous amount of refinancing. I think there will be a sense that Washington is trying to do something, that we're not just sitting back here. I think getting Congress involved by the end of the week is crucial as well. They move glacially, but I think there will be a bill, and after this $7.5 billion bare bones bill, I think something more will come as we go into the spring.
I think what we're finding is just people are they don't know yet. I mean, at the end of the day, these conversations have shifted so dramatically. So you think about it from a retail consumer perspective, when a broad amount of people in the U.S. have to start worrying about sending their kids to school, right? There's going to be a different conversation than focused on, okay, what's the supply chain impact out of China?
Right, and whether to shop right now is the least of it. I mean, it becomes a much bigger concern about your daily routine in life.
Can I just observe that probably most Americans have no coronavirus in their communities that they know of yet. I mean, it's so far it's concentrated in some population centers, and a lot of people don't know anything about it except what they're seeing on the news. So, I mean, I disagree with Trump when he says the media is making too much out of this because it could become very serious, obviously. But people seeing this on the news is for sure having an impact on consumer psyches.
I mean, at the same time, if you look at the absolute numbers globally of people, even in China, where it seems as though the cases have peaked and are now going down, the percentage of the population who ended up with diagnosed cases of coronavirus is very, very small versus the entire population of China. That said, they were obviously very aggressive about containment, which is not something that has happened here in the United States. They seem to be aggressive about testing, which does not yet appear to be the case in the United States either.
You know, and as you talk about that containment and quarantine, and I can tell you, as someone who has a family member, not here, but in Hong Kong, who is quarantined, my stepdaughter, it is not fun. It is extremely disruptive. It will wreck your life better than getting sick. But, talk about curtailing economic activity. And, you're seeing companies, I mean, Reuters yesterday had everyone working from home. Twitter
said the same thing,
right? They're canceling conferences. What's going to happen to March Madness? What's going to happen to company annual meetings? The Olympics, they're talking about delaying that now, which is an interesting thing rather than being binary in terms of actually just having it or not having, but moving it, which I think is maybe a good choice. But it's unquantifiable right now.
Yeah, and I do think that it's worth reminding everyone that no one is really sure what's going to happen in the short term. Talk to any expert you want. I mean, some of those headlines about the Olympics or about holding March Madness games in closed stadiums with no fans feels overkill. It feels like, based on the data, that's unnecessary. And yet, I do think the media has to sort of cover every angle of this. But I do think Rick's right that there's a sense that the headlines can kind of beget more panic because there's the risk of overcovering. I don't want us to have too insidery of a media conversation here, but I do think there's a little bit of that, with the news. Do you overcover it? Do you undercover it?
Right.
Well, and then there's schools. There's issues with schools here in New York City this morning. And, parents, I mean, it doesn't get any more sort of, than that. But that's what's going on here in New York right now.
Definitely.
Yeah, but those parents are going to start buying every protective measure for their children they can think of.
They're already sold out, Rick. Try going to CVS.
Boom in child protective gear.
As the person on the panel, maybe with the exception of Samin, I don't know, who has children in the public school system in New York City.
How do you feel?
I mean, I'm telling my kids to wash their hands and not touch their faces, which is an uphill battle.
Right.
It'll.
So in a purely,
if they're fine, they're fine. Like, there's not that much you can do at the end of the day besides not leave your house.
So in a purely non-analytical framework, I think a really interesting thing would be to track Google searches of what is coronavirus to what do I do if I believe I'm exposed to coronavirus. And I would venture to guess, it could be completely wrong, that we're going to see a lot more of the latter.
Right.
Just for what it's worth, I'm looking at the Johns Hopkins database that everybody's been looking at. 92,000 confirmed cases worldwide. If you look at a map of the United States, there is not a single known case in flyover country in the United States except for Chicago, maybe one in Wisconsin, and then nothing.
But what about Omaha? I mean, there are people quarantined from the Princess. Oh, those are quarantined. They haven't tested positive.
Yeah, right, but they're just in quarantine. Greg, I want to get back to you because you brought up the possibility that we could see Congress act in some way. You're there in Washington. Are we hearing members of Congress express willingness to do that? Have there been ideas that have been floated, or is all of that just sort of theoretical at this point?
A lot of trial balloons right now. People are throwing a lot up in the air. And just real quickly, I'd respond to what you guys said in the last 2 minutes, all the things we have to worry about, maybe where we could even see panic. Still another thing I never thought I would say, and that is there's a chance rates could go negative in the U.S. I would guess in the next 24 hours, that's going to be one of the big sidebars in the press, that we could see rates fall even further.
And Greg, I mean, that has been a bugbear for me for quite some time. Rates so low, and we were living off this crack of low rates since 2008, way too long for me. And I was saying, and I'm not the only one, that at some point there will become a crisis where we'll need that ammunition. And this could be that moment, and it's sad to say. And then, European economies are talking about making rates go lower. No one has any idea what that does to economic activity. No one has any idea, right?
And God forbid the stock market should finish down on the day.
Well, guess what?
Look at that. I mean, we are seeing that stocks have turned negative.
Well, that's the Dan Roberts effect.
Talk about the short impact on stocks. It didn't last very long, did it?
Wow.
Yeah, I mean, and we're seeing Treasury yields go higher by 6 basis points, which is not necessarily what you see when the Fed says it's cutting 50 basis points.
Mrs. Backfire.
Well, I mean, we raised that at the very beginning as we started the show. If the idea was to juice stocks, it didn't work for very long.
I want to take it back to. Okay, never mind. Just as we look at what's going on with markets here, we obviously have seen the last few days really characterized by volatility. That continues to be the case today, even as we get what perhaps we were looking for. Brian Chung ran downstairs. Now he's with
Brian.
us on set in the wake of this breaking news. Now that you've had a few moments, albeit while you were
in the elevator,
right? Yeah, while I was out of breath.
To digest this, any further thoughts on this emergency cut?
Yeah, well, I mean, again, it's relatively unprecedented. I think the timing of this is still really curious. The fact that they decided to enact a 50 basis point cut 30 minutes after the market opened. In 2008, when we did see 50 basis points. So again, this isn't unprecedented to have a cut this large. They did cut by 50 basis points October 8, 2008. That was before market open, though. So again, you have to kind of consider and put the pieces together. We did have the G7 statement earlier this morning. That was before market open from the finance ministers and central bankers around the world, saying they would have some coordinated effort to use their tools as appropriate, very similar to the statements that we heard from the Federal Reserve, from the ECB, from the Bank of Japan over the past few days, but no real hint about whether or not they would take action. Well, here you have the Federal Reserve actually doing that. So it'll be interesting to see if the other big central banks, the Bank of Canada, the Bank of England, the ECB, the Bank of Japan, if they follow. But the Federal Reserve, I think, taking the first step to do so, even though I guess technically Australia and Malaysia went first yesterday, is I think a big symbolic step towards getting the other central banks to do the same. That easing from other corners of the world. Watch the dollar, watch U.S. Treasuries, watch those types of asset classes as the world maybe takes on the same tone.
As goes Malaysia, so goes Jay Powell.
If we're in a situation comparable to October 2008, we're screwed. I mean, big time.
So based on
but
when I've been talking to people about what the Fed's reaction function to this might be, they haven't compared it to 2008. They've been more comparing it to the long-term capital management and the Russian ruble crisis in the 90s.